Good morning, everybody. This is Chris Robinson, Robinson Ag Marketing, with today's pre-opening grain and livestock comments for the 14th day of January, Wednesday. Well, we finally got a bounce. I can hear I can anticipate the insanity in social media where now everybody's going to be calling the bottom. Don't worry, the low's in, blah, blah, blah. That's absolute nonsense. Those are the same people that helped you do nothing in front of a report, which we knew had risk, right? We knew the report had risk, and you didn't. We knew we didn't have to spend a whole lot of money to defend that risk, but yeah, nobody knew that it was going to move like it did. So I would caution anybody from calling the lows here. I think where we settle on Friday is much more important. It's not that surprising to see a little bit of a bounce in the overnight markets. The Asian markets, I think, were rallying with what was going on with silver. Silver is up at $92. You've got gold also trading higher here as well. Crude oil sit at 61, 62. So those things, coppers had a big move higher. Uh, I think that may be what's fueling. Sometimes these guys in the herd, they're like, oh, we must buy all commodities, so they buy the whole basket. You see it in diesel. Um, for 2 or 3 weeks, I was screaming about the fact that diesel and crude oil, were at diesel was at 7 month low, traded 205. This is after we traded 270, back in October, November. So a huge break in diesel. You have crude oil trading at 55 bucks. It didn't get any attention on the news because, hey, nobody wants to talk about 5 year lows. But when we bounce $1.50, they're like, whoa, $1.50 divided by 55, that's 12%. Oh, crude oil's, exploded 12% in 4 days. They forget the fact that we were just at a 5 year low. So it's just the way the markets work. It feels like some people are chasing the overall commodity market, and that may be a good thing. Certainly, greens need something to help turn us around because we don't have a weather issue, we don't have a demand issue, and we have an oversupply issue, and that's what the USDA came up with. And like the USDA or not, if you didn't learn anything from this one report, it should be this: these reports represent risk, number one. Number two, nobody knows what's going to happen. I don't care who you are. I don't care how long you've been doing this or what your IQ is or how many acres you farm or whatever. And the third thing is you do not have to spend a lot to protect yourself against these moves. You don't. Years ago, you used to have to. Now, with these weekly and short dated options, you don't have to. So educate yourself. You don't want to work with me? Fine. Figure it out. Teach yourself. Use the tool that's there. Um, Also, if you work with me, I've been yelling at guys, begging them to roll the puts down. If you had a put that you paid 4 cents for that was worth 25 cents, if you had a put that you paid 6 cents for that was worth 25 or 30 cents, I wanted you to roll it down and take risk off the table because when the flat market rallies, the value of the put collapses. So it's a seesaw. That's why we tried to roll those puts down and get paid, put money in our pocket. We maintained a floor. And so if you haven't done that, get after it. I can only make suggestions. You guys make decisions. What can I tell you? Overnight, though, a good little bounce in the beans. Beans up 8, corn up 4, wheat up 2.5. And we're going to find out today, with the protein complex. Another new high for the move yesterday in March feeders and April fats. New 10-month highs, 10-week highs, 2.5 month highs. The market just keeps going higher. I think what drove that, honestly, is cheap corn. The market likes cheap corn, and also the fundamental problem with cattle exists, right? I'd say the two risks for cattle, if you're worried about a sell-off in cattle that nobody sees coming, just like the last one we had, nobody sees coming, it's going to be one of two things. It's going to be a stock market correction, or it's going to be they open up the border with Mexico. So the only way to defend yourself is to get a cheap put. And if we learned anything from this last USD report, all you needed was a cheap put in corn, and you would have saved yourself a lot of pain and misery and emotional pain. Uh, a big part of the when a market moves like that, it just knocks you in the gut emotionally. I get it. I understand. And the market's just like any other taskmaster. We had basically 18 months where corn didn't move. Who cared about corn, right? I even said it in my letter for a week or two. I'm like, the funds aren't even interested in corn yet. They were basically flat. They were short. short about long or short about 16,000. That's a zero position. They didn't even have an opinion on corn. They were long beans, um, and they were short wheat, but they really didn't have an opinion on corn either. So um, I would say like this: if you're still mad about the USDA, that's your business. Write them a nasty letter. Tell them get it off your chest. But guess what? We've got 11 more of those reports coming out the rest of the year. There's only 2 or 3 of them that are going to be real big risks. And if you don't know what those are, educate yourself. Get my letter, get somebody else's letter, find some information out there. There are other reports that are coming ahead of us that could also potentially move the market. The other thing we're watching right now, if you're looking for some sort of recovery in the grains, it's got to be some sort of weather issue here coming up in the spring because there isn't one in South America. Harvest is getting ready to go down there. Now, every day we're going to be peppered with, how much grain did South America actually grow? Because all that grain is increasing supply. An increase in supply is just one more bearish thing to worry about. So hopefully we get a bounce. Resist the temptation to call the low and back the truck up and buy, buy, a bunch of bushels just because you think it has to rally. If that last report taught you anything, it's what you think the market has to do and what the market's going to do. Lots of times can be completely sideways, different things. And you just have to hedge because if you don't hedge, you can get run over. Okay, guys, have a great day. 312 638 8868. Call me.